each of those two pairs of countries, and then there'll be an opportunity for everybody to questions, to ask for any clarifications, and to perhaps stop for a little bit and enter into a dialogue around some of the. And then at the end, hopefully we might be able to look at some of the common challenges and opportunities that we're seeing as well, so that perhaps we might be able to think about how we work together more effectively to strengthen the ecosystem at a regional level. So just by way of introduction, the British Council has been supporting efforts by governments across South and East Asia now for many years. And I think our journey coincides with the journey of the GSG, because we launched really around the time of the task force, the G8 task force. And we've been actively supporting governments to support impact economy policy, of which, of course, impact investing is a central plank. In 2016, we jointly launched the UK government's international strategy on social investment under the then leadership of the former Prime Minister David Cameron. So I'm excited to listen to see what he has to say later this afternoon at the main conference. And about two and a half years ago, we launched a partnership with the United Nations Economic and Social Commission for the Asia Pacific, ESCAP, to really accelerate the work that we were doing with governments. And since then, we've worked with governments right across South and Southeast Asia in helping and supporting them to develop impact economy and policy. We're delighted, particularly on the call today, to have our team from Bangladesh to share the work they've been doing, of course, which we've been quite closely involved with. So I'll stop there, and I won't take any more time in this introduction, and I'm going to hand straight over to our first two speakers. I'll introduce our speakers in turn as we go through the pairs of countries, as I said earlier on. Please do write any questions in the group chat, and we'll try to summarize them and in order to try to create a bit of a structure to our conversation throughout the next 85 minutes or so. So our first two speakers come from Australia. We have Sally McCutchan, who is the CEO and Executive Director of Impact Investing Australia, which doubles up as the Australian NAB of the GSG. And we also have James Pearson, who is the Head of Impact and Responsible Investments at the global general insurer QBE Insurance Group. So I am, oh, hello, we have a guest here. So I'm going to hand now over to Sally and to James to talk us through, to tell us what they've been doing in Australia. And one final thing I will remind everybody is that each speaker has 8 minutes to share their presentation. So Sally and James, I'm going to hand the floor to you, and I'm going to set my timer as well.
No pressure, Tristan, right? So thanks everyone for joining this session. As Tristan mentioned, I'm the CEO of the National Advisory Board for Australia, and I'm just going to talk quickly about a couple of things that we're doing here and then really hand over to James to give the bulk of the presentation. But right now, two big things are going on in Australia. We have a social impact investing task force, which has been put together by the federal government of Australia, and it's sitting in the Prime Minister and Cabinet's office. And we're looking at a number of things through that. It's been going for over a year now with the report due in October. The key initiatives are looking at an impact investment wholesaler, looking at a larger scale outcomes fund, and also an earlier stage social enterprise foundation similar to the Access Foundation. So we've learnt some good lessons from the UK from Cliff and the team there. And in addition to that, our other initiative is more a private sector-led initiative. It's called the Australian Sustainable Finance Initiative, and it's actually a lot of the major financial institutions, and it's actually chaired by Simon O'Connor from the Responsible Investment Association and Jackie Johnson, who is one of the larger insurers in Australia. And that's really putting forward some recommendations more from a financial institution and sector-led focus. And then the third area I'd just like to touch on, which we're just sort of kicking off, is trying to launch a Make My Money Matter campaign here, and we're working with the team in the UK to look at that as well. So I'll stop there, and I'll now hand over to James to talk about his great work that he's been doing over the last almost 5 years now with QBE.
Thank you. Thanks, Sally. Tristan, you can hear me okay? Excellent. So hello, everyone. So my name is James Pearson, and I'm the head of Impact and Responsible Investments at QBE. Just to start my timer, don't want to get the warning from Tristan. So, I just want to say straight off the bat that if there's anything that follows in this presentation that's of interest to anyone who's listening, just please feel free to reach out directly to myself and Caitlin here at QBE and the Impact and RI team, because we're keen to share our learnings and the journey we've been on. So who are QBE? So we are a global general insurer with 25 billion US in assets under management. We invest globally in multiple currencies, with main currencies for investment being Aussie dollar, US dollar, pound and euro. Our impact investment journey started in late 2014. We developed a program called Premium So Good. So this is an initiative whereby customers of QBE, insurance customers of QBE, can have 25% to the value of their gross written insurance premium allocated towards impact investments. So this was our effort at the time to align the purchase of insurance with the customer's beliefs and values around the environment and the community in which they live. So very innovative and something we're really proud of. And we started off with 6 investments worth about 100 million US. And this has continued to grow year on year. And we are currently at just under $1 billion US and 66 investments. And earlier this year, we made a public ambition to take this to 2 billion by 2025. So, the growth continues, the momentum continues. Our aim is to invest for impact within the boundaries and constraints of our strategic asset allocation. So as a general insurer, we are primarily investing in fixed income. So 85–90% of that 25 billion is investment grade fixed income, corporates, supras, sovereigns. And then we have a risk assets allocation, which is made up of liquid and illiquid risk assets, so private equity, infrastructure, real estate. And we've been exploring ways this last 5 years for us to invest for impact within these asset classes. So given the constraints of our IMAs, our risk appetite, regulatory requirement, what's our universe, investable universe, and then looking for impact within each asset class where possible. Given the majority is fixed income, you won't be surprised to hear the majority of our 66 investments are green, social and sustainability bonds. And we also have risk assets exposure, renewable energy, social real estate, for example. One thing that is different for us is that when we started this initiative, we wanted to stimulate development of the impact market, and we made a commitment to invest 100 million US in social impact bonds globally. And this has been really valuable commitment for us, although we haven't deployed anywhere near the quantum that we had expected to, and the social impact bond market hasn't grown as we'd expected. We invested in over 10 SIBs directly. We performed due diligence on many more, and we seeded the first ever social impact bond fund in the US with the reinvestment fund. And not only that, the learnings that we have got and the network that we have built through that has been really valuable and informed the broader impact strategy. In regards to impact, we're not mission-led, so we look to achieve diversity of impact across environmental and social impact areas. We've got 11 impact areas that we have defined, and we're looking for investment across all of them. Our view would be that the variety and diversity of impact will resonate with each of our policyholders in different ways. We're also looking to achieve impact across different geographies as well, again reflecting the footprint of our customer base. In regards to reporting, we share with our customers the impact of our investments via an annual investment impact report. This contains essentially an overview of the allocations, the impact areas, the geographies, and supporting case studies. In fact, our latest one is due out this time next week. When we started on this journey, we established a classification of social investment committee, which Sally, we're fortunate enough to have as one of the experts in that group. And the purpose of this committee is to independently, formally classify the impact of the investments we have made. So it's not just QBE saying that we've had impact, but also and really valuable to us has been the way that they've helped us learn and grow and challenge us so that we can continue to iterate and evolve, again, within our investment framework. It's fair to say that our impact framework has evolved. I think some of those first 6 investments we made potentially wouldn't make it into our pool of investments now. As the market's evolved, as we've evolved, as standards have become available, we've evolved our impact framework. So now we have just last year gone from 2 to 3 levels of impact, moderate, deep and high. Also, given the large amount of fixed income investments and the rapidly growing and evolving green, social and sustainability bond market, we recently updated our framework on how to assess GSS bonds, taking into consideration things like the issuer purpose, use of proceeds, financing, new or existing projects, the impact reporting, the innovation. I guess the whole Premiums for Good and impact journey has been very educational and continues to be so as the market evolves. And you know, that's all that we can endeavour to do, is continue to improve and develop. I think what's really exciting for us, just checking my time, Tristan, what's really exciting for us is this is a business idea that leads into investments. It ties insurance and investments together. And you know, this has ensured that we've got top-down support within QBE from a strategic customer perspective, and also buy-in across the different teams, from data analytics to the broader investment team to marketing and comms. And we also feel that Premiums for Good has permeated the organisation as well and built awareness of impact and sustainability and things that 5-6 years ago at QBE were not front and centre in the way that they are now. I think another anecdotal success story that was probably unanticipated is not only the positive customer feedback, but it's also the employee feedback. You know, people who are at QBE, new people joining QBE, have been informed by our head of graduate recruitment that every graduate has to present a case study around QBE when they join, and many pick Premiums for Good as that case study, so that's great. So I think in summary, what I'd like to sort of iterate is that, you know, a fiduciary investor operating within the constraints of a fiduciary investor, we're looking to demonstrate to other institutional investors that you can have impact in scale and make a difference with the investment capital. When we first started, the opportunity set was really narrow and small, and you know, over time the number of deals have developed, and the number of partners and availability has grown, and seen some great innovation. You know, we were proud last week, maybe 2 weeks ago, to be a key investor in a BNP equity index linked green bond. So this is a green bond that has a fixed component as well as a variable component.
I'm going to ask you just to finish up there, James. if I
yeah,
may.
Absolutely. Yeah, the variable component linked to a forward-looking climate index. So this is a first in Australia, and that's a real positive for us to be a part of. So our advice is just to get started where you are, and just continue to evolve and be as transparent as possible. And there's plenty of people out there who can help.
Great, thank you.
Thank you.
Not bad, about 8 minutes, 45 seconds by my timer. So pretty good. Indeed, Sally and James, we have a question already coming up there, so I'd urge you to have a look at that and to think about potential responses whilst I hand over to our friends from New Zealand. So I'm going to hand over now to David Woods, who is the chair of the New Zealand National Advisory Board, and Maria English, who leads the Impact Lab. I'm not going to read profiles out. You can find them all on the website, either the conference or of their respective organisations. In time, I'm going to hand straight over to the New Zealand team to deliver their presentation.
Tēnā koutou, tēnā koutou, tēnā koutou katoa, and good evening to everybody from New Zealand. Thank you, Tristan. New Zealand is a relatively small market, but very strong in impact investing, particularly in small social impact deals. Our overall impact market has grown over the last year by a factor of 13 to $4.7 billion assets under management. That's largely a result of a couple of substantial green bonds, but the non-bond portion has still grown from 160 million to 580. And we continue to see new funds announced regularly. 2 of the largest funds announced in the last 2 months, including one by ACC, New Zealand's largest healthcare insurer, for 50 million in healthcare impact investing in the last couple of days. We work very closely with our Sustainable Finance Forum, which is similar to the initiative Sally talked about for Australia, trying to design a set of recommendations to make New Zealand's financial system fairer and able to meet our Paris Accord goals by 2030. One of the most important features of growing the impact investing market is accurate measurement. and Impact Lab have developed a set of tools which make them world leading in measuring social impact, particularly at the smaller end of town. So from our point of view here in New Zealand, we learn an enormous amount about what goes on at the big end of town from initiatives like the Impact Weighted Accounts Initiative, but we believe that New Zealand has world-leading technology in the smaller end in measuring social impact, and that is what Maria English, the CEO of Impact Lab, is going to talk to us about. Thank you.
Thanks very much, David. First, can I just say it's a real honour to be here presenting this case study of our work in New Zealand. Kia ora, I'm the Chief Executive of Impact Lab. We're a mission-driven startup that does bottom-up impact measurement for decision-making. So the case study will focus, as David said, on that measurement aspect. I've got a presentation I'd like to share, so let's give that a go. Is that showing up for everyone? Great. All right, so when we talk impact measurement, obviously one of the big questions is, how do you know that your investments are really making a positive difference for people? And that question can be answered at a range of levels. And I'll step through this just to explain a bit the approach we're taking at Impact Lab in New Zealand. So the first level we can answer that question is as a procedural audit. Did we follow the right process? For example, did we set a target? The second level we can answer that question is in terms of pre-selected need. So are we investing in people or a region where need has been established? And government bureaucracies can often do that pre-selecting for us. So for example, if you're investing in specialist disability accommodation in Australia, government's going to make sure the people who are accessing that accommodation do need it. The third level of measurement then is qualified solution. So we know the people have a need. Do we believe or have reason to believe that the solution will work? And that's where we can apply criteria to increase our level of belief in that. So for example, if we're investing in affordable housing, we might set a definition of what constitutes affordable. Then we get to the top level, which is results measurement. And the question here is, did somebody's life change, or did the environment actually benefit from our investment? Investors sit at different places in the spectrum, but we at Impact Lab think that there are two drivers pushing us all towards that results measurement level. The first one is compliance, which I think has already been mentioned. So in our work, we come across investors who want the bare minimum, even greenwash type level of measurement, and that's fine, but it's not sustainable unless you add more depth to the measurement. And that's because in the end, regulators are going to seek verification, particularly in the current political environment. Existing financial regulation says you can't mislead people about the nature of an investment. So it would be odd if all of our representations have to be verified, except for this one. And we've already seen that unfold a bit in ESG, where we started with, do you have a board? And now we're at, you must do a detailed multi-day board evaluation. So we think that that drive is going to create momentum towards the results measurement stage. And then the second driver, which I'm a lot more excited about, is the positive opportunity for value creation. So results measurement is powerful because it enables real prioritization based on impact and weighting impact against other things that we care about. And it enables the creation of new asset classes. So social bonds are the next asset class emerging, as is being demonstrated with the great work happening in Australia. But social bonds are bespoke and they have high transaction costs. So at Impact Lab, our view is that seizing the impact opportunity at scale requires a different approach, which is to productize and standardize our measurement using a bottom-up method. So we're partnering with philanthropists and impact-first investors in New Zealand to achieve this. The photo on the right is of some of the students and their teacher from an education program that we measured results for. We're building a bottom-up toolkit for results measurement that's connected to real people and real change and is exportable to other jurisdictions. And the way that we're doing that is to use globally unique data sets. So in New Zealand, we have a government research database that contains information on every New Zealander and their interaction with government services across many domains of their lives, including education, health, social welfare, employment, and justice. We can also see what the cost of those services was to the government, and it's anonymised, so we can't identify anyone. This adds up to over 166 billion facts about 9 million New Zealanders. And what this data is showing us is that social need looks very different to how we have traditionally thought about it. The traditional policy decision-making process uses averages and aggregates. Now, averages are powerful because they enable us to look at trends cut by demographic and assess top-down indicators of progress. But averages imply a normal distribution of need. But when we look at our individualized data at population level, we can see that need is not a normal distribution. So let's take education and training as an example. In the COVID economic climate, we know that many lower income people are losing their jobs and fewer jobs are available. So how does the education system prepare children for a world like that? Well, in New Zealand, a mid-level high school qualification, which we call NCEA Level 2, is the entry requirement for many jobs, and you need it to get into university. Across all kids, the average risk of not achieving a mid-level high school qualification is 27%. But for the most at-risk kids, it's 74%. And that's that red portion of the need distribution. So in other words, 3/4 of the kids in the high risk group, which is about 15% of all kids, don't achieve the crucial qualification to access higher income jobs. And most policies and systems ignore those kids. So we've partnered with New Zealand's largest philanthropic trust, Perpetual Guardian, and a local high school to measure the social impact of a program called Makerspace that targets this problem. So Makerspace operates in Manarewa High School, which serves one of New Zealand's lowest income communities. It provides an environment on the school campus where students can pursue STEM-based projects in an inclusive, community-driven environment with access to technology tools. Kids design and build their own products, they sell them online and at the local market, and they engage with local employers. So we used disaggregated data to measure the lifetime social value of this program for the students who experience it. We did this by working closely with the school to map the trajectory of students in the program, combining our population individualized data sets with the expertise of the teachers who run the program. So on the left, you can see a kind of conceptual visual of how we think about the trajectory of someone's life and how that trajectory can shift when they interact with an effective program. We then valued the impact of a range of outcomes that the program creates, using, again, our individualized data and the costs associated with it. So the impacts we looked at included the differential income impact of achieving a STEM high school qualification, the impact of employment on income, health costs, and future use of welfare benefits, and the impact of reducing risky behaviors on cost of government, things like
Maria, can I ask you just to begin wrapping up? We're already over 8 minutes, but this is fantastic. But thank you. Just
absolutely. So I'll get to the headline number, which is that we found it, adding all that up, a social return on investment of $3.90. And next year we'll be able to update the inputs and see what changed. So to conclude, we're building standardized products to give impact investors transparency over their portfolio. And we're keen to talk to anyone who's interested in achieving the same mission, because we believe that results measurement can be scalable and it can drive real insight and real verification for investors. Thank you.
Great, thank you. Thank you very much indeed. So I think there is a common thread that runs through both of these two first presentations, which is around the measurement of all of this. And we've seen two examples from James and from Maria there of approaches that are being undertaken. There's a couple of questions there that I might now put to our speakers and ask them to respond to. So there's a question which is following up really on the impact measurement and how do you, from Farhad in Bangladesh, so a question around how you're measuring impact to comply with the definition of impact investment and to ensure best practice. There's also, let me just see, yeah, so there's a question there around impact measurement, which I might ask James and Maria to respond to. And then there's a broader question around how you balance the overall reward and risk profile. I think that may have been directed towards you, James, although it's not clear exactly. And then a broader question around how impact investors can encourage better businesses as well. So how can impact investors encourage more impactful, socially impactful enterprise as well? Great. Maybe I'll ask, and a question at the end, which is around why have NABs been established, it seems, in perhaps the developed economies of Asia with less coverage across Southeast Asia. I might talk a little bit about that and the efforts we have made across Southeast Asia. Maybe I might ask Cliff if you might want to sponsor that one as well, and talk a little bit about GSG strategy in that regard, but perhaps we can come to that one towards the end. So maybe James, over to you first of all, or James or Sally, to respond to that.
Yeah, I'm happy to jump in. Thank you. Thanks for the questions. So basically, just answering the second question first about how do you balance overall reward risk profile in terms of financial return and social impact. So, as a fiduciary investor, the financial return, every investment that we assess for impact first has to go through our investment team and meet the standards of any asset class and current investment. So that's always the first port of call. And once an investment is deemed to be, financially suitable for QBE, then we will overlay the impact component. But yeah, it's the two go together, but the financial clearly comes first. The first question was around measurement of impact, I believe. So as I mentioned, we've iterated our framework for defining and measuring impact. So, we're fortunate as myself and Caitlin, who some of you may know, and Caitlin, has really immersed herself in the global standards and, done a lot of really good work with the impact management project. And that's really helped form a structure of how we classify deep, moderate and high impact. We look for SDG alignment as well. So we've, taken those two frameworks and built them into our categorizations. Most of our investments, we're looking for that B and C component of the impact management project, so to benefit people and planet and contribute to solutions. And clearly, as a large institutional asset investor, many of the social bonds, green bonds, the fixed income instruments fall into the benefit people and planet, but there are more and more appearing in the contribute to solutions. And then, we have some deep impact investments like social impact bonds and some of the social housing that fall into contribute to solutions. So again, we just, we invest where we're eligible and are able to, and look to fit them in into that framework where possible. Hopefully that answers our questions.
That's great. Thanks, James. I'm going to just ask Maria or David to respond very briefly on some of those questions that you think most pertinent. I can ask you to keep your responses quite brief, so I can.
I'll leave it to Maria.
On the question of how we measure impact, I suppose the opportunity we see is to think about social outcomes in terms of risk. The overall frameworks are really useful, but if we think about it in terms of a risk to be effectively managed, then taking a bottom-up approach where we look at what's actually happening to individual people and how their risk factors are changing and the associated fiscal and other costs and benefits of that, I think enables a granularity of understanding, which means we can then actually manage the risk in a way we've never been able to do before. So I suppose that's the opportunity with the bottom-up type of measurement.
Great, thank you. Okay, fantastic. So I will ask our panelists to keep an eye on the questions as well, but I'm going to move and to perhaps, if I don't capture everything, so you can take the opportunity later to respond as well. But I'm now going to move a little bit further north to South Korea and to Japan, and we'll kick off in South Korea. And I'm going to invite Duckjun Lee to talk about the impact investors landscape in South Korea and the D3 Jubilee program as well. So over to you.
Thank you, Tristan. Hello, everyone. My name is Doug Lee, and they're running D3 Jubilee Partners Impact Venture Capital, and also board member of Korean Lab. Korea is here. I mean, the social ventures is thriving. This is some snapshot of a diverse type of social ventures in Korea. And UMA, I will cover it later, and another social ventures covered a cover page of Time last year. And the bottom left-hand side is a restaurant, but as a social enterprise restaurant, which ranked 1 star. They are hiring dropouts, schools and immigrants and training, but providing very excellent service and food. And the right-hand side, they are more tech-based, smart rehabilitation social ventures. They are listed on stock exchange. I think that several factors are driving social ventures in Korea. One is, of course, that we see the social environmental problems mounting up. The social gap is widening, and we are going through the aging society, which is very similar to Japan, I think. And also we're facing and realizing the climate crisis is a reality. And the right-hand side, we think that to respond to those social and environmental problems, but we have on the other side, very strong entrepreneurship, and the entrepreneurs are trying to use these technology innovations, not only to achieve financial goals, but also they very much also, well, not all, I mean, some type of entrepreneurs deeply engage those social problems. And also the Korean impact investing, the ecosystem is also growing very dynamically. Private sector efforts and the government policies, and the Korean Lab is working as well. So D3 is well, venture capital. Well, I mean, impact investing has a very diverse asset class, but we pretty much focusing on the venture assets. In Korea, we have different asset class, the players, for loan providers, for social enterprise, crowdfunding, also social impact bonds. And we have several projects of social impact bonds. I personally invested in the social impact bonds, and which was successfully completed. I was refunded. So we have some experience of social impact bond and other asset class. So, but the D3 is well, we are working in the venture capital domain, and we have about the $40 million AUM. But total, we estimate the total impact capital in Korea is around 400 to 500 million there. So we are working, we are investing in Korea, but also around the corner of the world, and working with the various type of players, accelerators, intermediaries, foundations, corporations, and some other players there. So we run 2 funds. We completed the deployment of Fund 1, and we are now running second fund, and which is also almost we deploying, and we are preparing for the next one. The Fund 1 is pretty much we focusing on the social gaps. We're trying to demonstrate, democratizing the entrepreneurship in to narrow down the gaps in the education area, healthcare, some other financial service areas. Second fund, we are balancing out a little bit the environmental issues as well. But next fund, we think that we pretty much focusing on the climate to respond to the climate issues. So I prepared a few cases just to give you a better sense. One is Undp, which is a fintech solution for migrants, workers working in Korea. I mean, this is the big the area, as you know. The conventional banks charge a lot and very inconvenient. But Undp actually developed a very efficient, very affordable, what the UN SDG target actually to lower the fees below 3%. But Undp actually the enabling the remittance is below about the 1.5% and very, very convenient. So they have been, they achieved the remittance amount of about $400 million from immigrant workers in Korea to send it to 17 countries in Asia, Vietnam, Bangladesh, some other Philippines there. So I'm showing that how diverse, I mean, the investors and the current grant the organizations there that some of the commercial investors also invested. I mean, the impact investor like also is invested, but they have received the grants and also technical assistance like from Singapore University, Obama Foundations, and recently they were selected by MetLife Korea, and they received some grants, and they are applying for UNCDF as well for grants. So to support the mission-oriented ventures to grow, really, I think they need not just the impact funds, but also all different intermediaries, organizations. Another case is Enuma. It's founded by Korean woman entrepreneur in California. They developed the tablet-based education tools for kids, for all kids, for regular kids and for kids who are in the special needs and some particularly children left behind in the class. Last year, or over the last few years, they developed an African version called Kids School, and they participated in the competition, X Prize Learning, that was sponsored by Elon Musk of Tesla founder, and the Enuma got the final awards. They received that, and using that procedure, well, the procedure is pretty big. I mean, they received about $7 billion and developed more their product optimized for the kids in Africa, where, I mean, they have a lack of schools and sufficient teachers there. But they're using these technologies and tablets, and actually they proving the learning, the efficiency is pretty good. So for this case as well, they received commercial investors and impact investors like us, some other Korean impact funds as well. And also some grants, I mean, USAID and the UK and KOICA. So they have a very global the user case there. Last case, I mentioned that.
I'll go into your last minute, so just give you 1 minute just to finish off. Thanks.
Yeah. So this is a some funder. They're providing working capital for solar projects, and they are operating in 10 countries in Africa and India. So we are very early investors, and also they have a very diverse type of investors and grant that. So lastly, in addition to investment, we organize Asia Impact Investors Forum. So we did 3 times. The last was in November. So we organize about more 100 family office impact investors across the Asia. So that's it.
Great, thank you. Well, very promptly finished. Just on the time which I have here, which nobody else can hear. Thank you very much. It was great to see the progress that's being made in South Korea since I had the privilege of being in Seoul at the launch of the NAB, I think a couple of years ago now. Fantastic. So we're now going to move up to Japan, and I'm going to invite 2 speakers from Japan. We have Sayaka Takatsuka and Chunmei Huang, who are going to present the landscape of impact investment in Japan. So Ms. Takatsuka has worked for the Shinsei Bank Group since 2004. She set up the first impact investment fund in the country in 2017, the Childcare Support Fund. And amongst a whole host of other accolades, she was awarded the Women of the Year 2019 by Nikkei Women. And she's joined by Chunmei Huang, who's a senior director of the Shinsei Corporate Investment Limited. So please, over to you two.
Yes, thank you. Thanks so much. Firstly, thanks so much for giving us this opportunity to present the case from Japan side. My name is Chunmei Huang. Today with my colleague Sayaka Takatsuka, we will present to you the two impact investments within Shinsei Bank Group. We are also the committee member of GSG Japan App. And next slide, please. Shinsei Corporate Investment, where we are, is the 100% owned investment subsidiary of Shinsei Bank, a listed main bank in Japan. After involved in private equity investment for more than 10 years, and also from our own experience of giving birth, raising kids while full-time job, Sayaka and myself do feel there are so many challenges faced by the working population in Japan, such as childcare, elder care, work-life balance, and work style innovations, etc. Consequently, we decided to start impact investment in such a field and launched our first impact investment fund, Japan Impact Investment 1 LPS, so-called Child Care Support Fund in 2017. Actually, this fund was also the first impact investment fund for Japanese bank group. Before going into more details, I also would like to share you a brief view of impact investing market in Japan. Next slide, please. Thanks. The slide is the last year's survey conducted by GSG Japan App. The confirmed asset size in Japan was about 4.4 billion US dollar, compared to the global market size of 715 billion US dollar. The position of Japan is less than 1%. Total size is pretty small. But you can also see from the chart, the impact investing in Japan is growing rapidly as a trend. And the growth in last year was mainly driven by the new players from the mainstream financial institutions in Japan. Next slide, please. Low birth rate, aging society, and the decreasing labor population quite close to a career side are the major social challenge by Japan. A structure to help people keep on working while taking care of children and elders is in urgent need. Next slide, please. Our fund are focusing on workers. Serial change of the fund is to create a diverse way of work and life through investment and value-up activities, mainly aim to contribute to SDGs goals of 3, 4, 5, and 8. Next slide, please. When we began our first fund in 2017, the awareness of impact investing and SDGs by mainstream financial institutions was pretty low. So we decided to set up the first fund as a pilot fund leveraging all Shinsei's own principal capital. The size of the fund was about 5 million US dollar. And after having more than 400 meetings with social startups in 2 years, we have invested into 6 companies, and the fund has been fully invested by last March. Next slide, please. In last June, we have established our second fund, so-called Hataraku Fund. Hataraku means work in Japanese. The fund is co-operated with SHIF, Social Innovation and Investment Foundation, and also has close alliance with Mizuho, one of the 3 biggest banks in Japan. Current fund size was about 35 million US dollar, and we are targeting to raise up to 50 million US dollar by end of this year. It is also an external LPs participated fund. We have various investors from asset managers, major banks, regional banks, business companies, and universities, etc. So far, the fund has made 2 investments, one in a company called Life is Tech, which is a coding education program provider startup. The second investment is called Unifa, a social startup providing IoT solutions to child care centers. And the targeted IRR return of both 2 funds is 15 to 25% normal private equity level return. Now I would like to pass to Sayaka to explain the impact management process of the fund.
Okay, thanks, Chunmei. Good evening, everyone. So from here, I would like to go through the process of impact management of our fund, and then later share with you a bigger picture on what we aim to do through our fund activity. Our fund pays attention to the impact assessment of each investee companies as well as the fund level impact. So we started from formulating the theory of change of this fund, and to describe the targeted area derived from our social challenge, we drew this 2 dimensions map shown on the left bottom of this slide. Once we encounter an investee candidate, we carefully discuss where in this map the company should be positioned, and so whether the impact investment to such company seems to be in line with our TOC. Suppose that we luckily found a company which seems great to invest, and the process goes on to the individual due diligence process. And as for the social due diligence, there are 2 levels of assessment, which are business assessment and organizational assessment. On one hand, as for the business assessment, I would like to share the frameworks and the guidelines we use by explaining the following 3 steps. Number 1, to start with, we utilize the framework of IMP's 5 dimensions: what, how much, contribution, and risk. Number 2, we also create the first logic models, which tries to systematically illustrate the causal relationship between the investee's intended impact and their business activities. And number 3, for setting indicators for social impact assessment, we refer to IRS Plus of the GIN and also the guidelines of the country and the government of the related industries. On the other hand, as for the organizational assessment, we confirm both the negative and positive impacts. If a significant negative impact is confirmed and no corrective action is undertaken, the investment will not be further pursued. Throughout the monitoring period of our 3 to 5 years on each investee, we continuously update the logic models and other assessment tools. And we issue an impact report to our limited partners in the fund on an annual basis. And as the final step of the investment, the fund explores suitable exit options as a part of responsible exit discussions as well. Currently, one of our top priorities is to create a successful example of an impact IPO model, where a social company with successful economic growth IPOs disclosing the social assessment results and gains deeper understanding to their business from the investors with longer term view and who values their impact. So what do we aim to do? Why do we do this? We have set 2 main purposes of our fund. The first one is to achieve both the economic and social returns. Of course, we're an impact fund. And the second is to build the ecosystem of impact investment in Japan through the fund activity. Like Chunmei explained, in 2017, our first impact investment fund as a Japanese bank was 100% funded by Shinsei Bank Group as a pilot fund. And in the phase 2 in 2019, our second fund invited co-managing entities and the external investors. So far, there are 10 LPs in our fund, and one of their main purposes of participating in this fund is to learn how to make impact investing towards social challenges in Japan and how to conduct social impact assessment that works for both investors and investees. As the phase 3 in the near future, we expect these LPs to become proactive impact investors, already outfitting practical know-how, and to eventually lead the market expansion. If more and more investors start impact investing, an extraordinary amount of risk money would flow into this market to support social entrepreneurs through our mission to create a better world. We ourselves are still in learning and experience gaining phase, and we hope to associate and be a team with more and more players so that no one is left behind. Thanks. Thanks for listening.
Fantastic, thank you. So, and thank you very much for keeping to time too. Excellent timekeeping skills there. Okay, brilliant. So I think what I'm going to do is I'm going to move straight on to South Asia, because I think there's some questions there which are kind of more general questions that are relevant, I think, across the 6 countries we have presenting here. So perhaps it makes more sense to come to some general questions around particularly establishing NABs and advice for starting new NABs later in today's session. So what I'm going to do now is I'm going to move to India, and I'm going to invite Ramraj Pai to take the floor, who is the CEO of the India Impact Investors Council. So Ramraj, over to you.
Thank you. It's a pleasure to be here and talking about the Indian impact investing space. Just by way of a quick introduction, the IIC, or the Indian Impact Investing Council, is about 5 years old now. We have about 50 members, most of which are, if I may say, reasonably, I would say, advanced impact investors and asset managers. The industry is, as per our latest report, about $12 billion, which is assets under management. It's growing at about 25%. And I think the key sectors of impact intervention are health, education, financial access, agriculture, and some other areas like clean energy access and so on and so forth. Much of the funding for the Indian impact sector is international, though in recent times we have seen increasing interest from domestic capital, development finance institutions in India to also participate. One of the big agendas of the IIC is also to be able to create a strong pull from domestic capital to also invest into the Indian impact sector. The specific initiative that I wanted to talk to you today about is I must say, quite radical in terms of what the Indian ecosystem is attempting. And that's the concept of a social stock exchange. And the whole idea is how do you really create or bring capital market benefits to the social sector. And I'm sure all of you will agree with me when we really speak about the fact that, by and large, a large number of organizations, whether they are for-profit impact enterprises or not-for-profit social sector organizations, there's a huge challenge of scale. And a lot of times people are running around just trying to get their funding in place, support funders, provide them all of the information that they need. So essentially, a lot of the time that should be actually spent with beneficiaries, supporting them, actually goes on to the liability side of the balance sheet rather than on the asset side, if I may put it like that. So I think the whole idea of the social stock exchange was really to create a platform where for-profits as well as non-for-profits can come together, raise money at a larger institutional level and create an organized space for which is controlled, which is regulated, which has the blessings of the government, to really put together a manner in which both large institutions, corporates, philanthropists, both international and domestic, can invest in the Indian impact sector in a very credible and scalable manner. This is an initiative which has come from the government of India, and I must say that it's a very radical new initiative. We have had similar experiences or efforts by other governments. I'm aware, and I'm sure Cliff will validate me, that there was a similar exercise which happened in the UK. I think Singapore has something which is, I think, the IIX. And these have had, if I may say, differential degrees of success. I think the real change that we are trying to bring here is that this entire initiative is government-led. It's led by the government of India. It's led by the key regulators, the securities regulator, the banking regulator, and the Ministry of Company Affairs, which are really the three big partners in any government agenda of this fashion. I think the way this is going is we are trying to think about this in 3 or 4 dimensions. And what are those dimensions? The first dimension is very, very strong entry barriers. So you ensure that you don't get riffraff coming in and trying to raise money on the social stock exchange. Second is strong need for reporting and measurement of impact. The third is really disclosures of a fairly high standard. And I would say the fourth is incentives for investors to participate in the social stock exchange. So I think, the way the government and, other ecosystem partners are trying to get involved in this is really to figure out how do you incentivize the investors? Can we give them tax breaks? Can we give them other reasons to invest into the social stock exchange? At the same time, how do we ensure that there are appropriate entry barriers to ensure that only the best and the most credible organizations enter? And I also think that there's been some great innovation which is coming up in instruments like what is called a zero coupon, zero principal bond, which is essentially going to be issued by a not-for-profit. So a not-for-profit can issue a zero coupon, zero principal bond, and that can get listed on the exchange. And anybody who wants to participate in, say, a particular area, it could be an education bond, it could be a health bond, it could be maybe a clean energy bond, could buy a zero coupon, zero principal bond, which is effectively you just get nothing at the end of the project. So I think that is something which is, I must say, quite exciting. I think the government has been extraordinarily open. There have been multiple consultations. The IIC itself has been, and our members have been fairly centrally involved in figuring out what works, what doesn't work. There have been fairly large consultations. Feedback has been taken. And I think where we are today is that, we are in the process of potentially launching this exchange. And, I think this is something very interesting. What this can do is that it can enable stock exchanges to really catapult themselves beyond asset managers and reach the LPs directly. I think this will bring liquidity to the impact investing market, which is a crucial need. And I think, we are really excited that something like this could come out of an emerging market like India. And I think the key question that I want all of you to think about, which is very important, is the whole idea of harmonization of impact across sectors. Because essentially in a social stock exchange, you're not buying the company for its profits. You're not buying them for their what kind of profits they've generated. You're buying them for their capacity to create impact. And when you buy and sell something for their capacity to create impact, how are you going to harmonize this impact across sectors? So how do you see the value of a company in the education impact space vis-a-vis something which is in the health impact space, vis-a-vis something which is, say, in the agriculture impact space? And that's one of the big challenges. And I'm aware that Sir Ronald Cohen, he's been working on this whole area of creating or working with the Harvard Business School, and I've seen some of his papers on really creating a harmonized impact currency, which will enable a very high quality, if I may say, common currency of exchange, because that is when the stock exchange will really come alive. Because really what you're doing is that you're going to say that this is one unit of impact which has been created. I think that's the big challenge in front of us as an industry, is how do you make this simple? How do you make this commoditized? How do you make this tradable? Very much like any other market operates, whether it is fixed income markets, currency markets, credit markets, equity markets. I think the game is really in commoditization, in simplification. My 8 minutes is up, so I'm going to stop there and hand the mic back to Tristan. Thank you.
Thank you very much indeed, Ramraj. That was a very concise and whistle-stop tour through some very exciting initiatives in India. And I would be grateful if you have the time or inclination just to, once again, perhaps in that chat box, highlight those four things you mentioned that you thought were critical to the success of the stock exchange. You mentioned the high barriers to entry, impact measurement. The third one I was trying to catch, and there's something around incentives at the end. So it'd be great just to sort of
I will do that, Tristan. The third was disclosure and the fourth was incentives.
Great, thank you.
Sure.
So move into our final speaker now from Bangladesh. Whilst we do that, we'll remind everybody on the call, we've got about 115, 16 participants on the call now. I'm trying to see what common themes are emerging in the chat box. There's certainly something around how we can encourage NABs in emerging markets across Southeast Asia, potentially where there currently aren't any. There's definitely a theme around impact and impact measurement, which is there, and also particularly the concept of a harmonized impact balance sheet and how we might be able to create an idea of units of impact that can potentially be transferred as well across different sectors. So how do we do that? So some themes emerging there for our panelists. Please do put your questions in the chat box. And I'm now going to move over to Bangladesh and to Arastoo Khan, who is the member secretary of the Bangladesh NAB and the chair of the advisory board for Build Bangladesh. So Arastoo, over to you.
Hi, this is Arastoo Khan. I'm member secretary, as Tristan has said, and we're good to see Tristan because we have been collaborating on our on this on the book that we are working on, impact investment in Bangladesh. Now, first of all, let me welcome the GSG initiative for a regionalized focus to activate impact investment in the region. This is, I think it's a great initiative, and it's a focused, and that is makes it more graspable. You can hold it. So, and we have, Bangladesh has been an early pickup in this group, and Bangladesh, as you know, we have a strong national advisory board, and we have regulators in it. We have it is headed by the sitting secretary of the Ministry of Finance that gives a huge push. And then we have the development partners participating in it. We have the multilateral development banks and financial institutions. The IFC is there with us. We have academics and investors. So it is a perfect ground to assume that it is going to do well. But we are, as I say, we are not in the race as you have given the narrative of the piles of investment, the funds that have already been created in Australia, in Australasia, or in the Far Eastern countries. We are not there, but we think that our emphasis, as I said, we are calling it progression on impact investment in Bangladesh, and the need for a narrative of a singular narrative of the understanding of impact investment. Why we emphasize on singular narrative? Because our feeling is that impact investment is variously understood in different countries, even not only in Bangladesh, but globally. Farhad Reza, our colleague, went to Addis Ababa, and he has gathered that impact investment is understood very differently by different people. So we thought that impact investment should be understood in a manner that the world, all other impact investors understand it. Like we very often confuses with social investors, social impact investors, social business, philanthropy, charity. Impact investment has to be as it is defined, we think, as it is defined by Jin, or as it is made to understand by Ronald Cohen's book on impact. We see very often any investment you make has a return, no doubt about it, and it has an impact also. Like the tobacco cultivation that happens in my village areas, it has a return, it has a financial return, but does it have any impact? It has an impact, it does have an impact, but is it impact as we understand? That is very important. Can we measure that impact? So this is, we thought is very important, like textile industry in Bangladesh is coming. If textile industry results in passing a lot of dye into our rivers and lakes, is it going to be a good impact? Though it has an impact in the sense that the entrepreneur is making money. So this is where we think that we should have an understanding what impact investment is. And as we have followed in Bangladesh, and we have made a landscape study, Tristan has been supportive to that, and we have agreed to the Jin definition. And we must aim to see impact investment as Sir Ronald Cohen wishes to have seen his book on impact. we want to focus more on a more orthodox definition of impact. Any impact and lose whatever creates some ripples, we should not call it impact. That's why we think that we should have a narrative of it, and that anything must be like causally linked to the social and environmental impact. We don't see that in many of things. So we are for having an understanding and a total understanding that is understood by everybody what impact investment is. Another thing that we have seen that if you throw away 5 or 6 sewing machines in a village, it does have an impact. But problem with impact investment is the scalability. Social impact investment is the scalability. We have to have the ability to scale up, which is very, we think is very important. So the scale up and the measuring side, which has been focused over and over by all the speakers that has spoken before me. And about that, I will give a small narrative of what we have done in Bangladesh. This is not, I tell you this, we are not going into the technicalities because we are in the early rungs of the ladder, but the progression has been, the government has taken an initiative for an alternative investment fund, which encompasses the impact investment. And that gives the rules of the game, how impact investment will be rolled out. Then the central bank came out releasing certain circulars on alternative impact investment, as I said, which includes, among others, the venture capital, PE, and the impact investment. In 2016, Build Bangladesh, with which I and Farhad are closely associated, we launched our first impact investment, we call it summit, but it's an international conference that we have had. And finance minister, the central government bank governor, they were there to launch it. So we have in 2017, Build Bangladesh UNDP Impact Fund launched by the Honorable Prime Minister of the country, and with her was Achim Steiner, the UNDP administrator. We launched a $100 million fund. But you see, it's very easy to launch a fund, but we did not actually, it was too big for us to launch a fund at the UN. Then later we found that it is a better way to go in a smaller way. Then we really launched and got approved by our SEC, another fund, which 10 million fund supported by a Hong Kong investor. So this is how we learned over it. Then in 2018, we became the GSG member. That was a milestone, and that's how we entered with you. And we had a NAB created, formed in 2017, and 2018 we had Bangladesh GSG member. We became member and we joined the New Delhi summit. So in 2019, we have membership of the asset manager of GIN. So broadly, actually, this is how we have traveled. But then again, I must appreciate this and appreciate the initiative of the GSG in trying to regionalize this and give a more focused and drive towards activating impact investment in the region. Like as I said, that the GSG and Bangladesh, actually the Bangladesh is basking under a somewhat, if I may call it, Japan-Bangladesh buddy program that we have started. And this is a initiative taken up by GSG. And what we are trying to do is to lining up with JICA, Dhaka, and how impact investment ecosystem can be supported. This is what we are trying to work out. When we are periodically meeting with Japan, NAB, of how we had a meeting with Masa also, you know Masa, he has been also, Masa was working in Bangladesh as JICA's representative here. So he was saying that how we can tie up JICA resources maybe in helping to help the impact investment ecosystem developed in Bangladesh. Then another thing that we came to know, it's very interesting, is that Japan has tried to pull in the dormant account of the people who have closed their account or have died. they are trying to pull in and make a fund that can create an impact investment. But I'm not sure how much they have been able, but this was pretty interesting. As a student of Bank Bangladesh, I have had the experience of this dormant account money being transferred to the central bank, who does what I don't know, but I think this is where we can do some kind of work with this fund for the benefit of the poor and whatever. And we are also trying to use JICA and Japan Embassy as to leverage and promote and secure government's support towards impact investment. So with Japan, JICA being, as you see, JICA or Japan is the largest individual donor country development partner in Bangladesh. So Japan and JICA, if are seen to be supportive of impact investment in Bangladesh, this will create a kind of event within the government in trying to develop some kind of impact investment. So these are the things that we have been able to actually do up till now, since we became the member of GSG after forming our NAB. So these are basically would like to maybe conclude now. If you have any questions, I will take the question. Thank you.
Great, thank you, Arastoo Khan there. Okay, thank you. So first of all, thank you very much to our 6 presenters, well, 6 countries. We've had more presenters, but thank for keeping to time. We now have about just under 20 minutes to reflect on some of the questions and to take some more questions. What I'm going to propose is that we go straight back to Ram in a moment, because there are, I think, 3 questions that are specifically for him. And then I'm going to go back through our countries, and I'll tell you the question now so you can have a think of it whilst we're hearing Ram's immediate responses in a moment. So I think there's some general questions around, first of all, how important is the role of government, and how have you successfully engaged government in your NABs? And then secondly, there's been some conversation around how either you can support other NABs in other countries to start up, or what would be some of those immediate things that you might need to do if you're looking at establishing a NAB in a country which currently doesn't have one. So perhaps I can invite our speakers to have a think about those questions, whilst I invite Ram back to answer some questions that were specifically related to India. The first related to the CSR law, and whether or not there is any scope for CSR funds to support the impact investing movement in India. The second related to state-owned enterprise and their involvement in impact investment. And the third was what are some of the specific types of investment products or tools that might be needed to build the infrastructure. So perhaps I can start with you, Ram, to reflect on those 3 questions. And I'd invite our panelists to keep your answers really short, maybe just to a minute or so we can hear from everybody. And then at the end, I'm going to invite Cliff to talk a little bit about the plans that GSG has in their efforts to grow the NAB family across the APEC region. So Ram, over to you.
I will keep my answers short. I think the first question was whether CSR funding can be allowed into impact investing. CSR financing today in the Indian context is not allowed into the Indian impact sector, primarily because of the idea that CSR funding should typically go for not-for-profit finance, whereas the impact sector can have a profit element. And that's one of the key reasons, is what we assume. Second is, what is the role of state-owned enterprises? By and large, today, the state-owned enterprises, do not have a direct, very substantive role in the Indian impact sector. That said, I think today every bank in the country has certain prescribed norms in terms of how much they need to invest into small and medium enterprises, how much they need to invest into agriculture, and that is embedded into regulation. That's got nothing to do with impact sector as such. This has been there in India for the last 40 or 50 years. So that is something which I would want to qualify as an impact investing. But that be as it may, today, the role of the state-owned enterprises is not very substantial. We do have some organizations like SIDBI and others who are participating, but one of the big agendas of the IIC is to really push and figure out How is it that we can get the government as a partner and enable them to see the potential that impact investing has in this country to be able to bring about affordable, innovative solutions for low-income customers? That's as far as the state-owned enterprises goes. I think the third question was around incentives and what kind of tools are needed. I think clearly you do need incentives. I think if we want investors to come in here and you need to create liquidity in this market, you would want to give them a certain set of incentives. So incentives could be in the form of tax breaks. Incentives could be in the form of benefits that they may derive, or the ability to allow for corporate CSR funding to come into the impact sector. Those could be some of the benefits that they could get. In terms of what products and tools are needed, I think the big agenda there is really around bringing together standardization in, if I may say, reporting in the fact that when investors look at these impact reports and they are investing in a variety of projects, I'd like for them to see the same thing on page one. I mean, we can't have, and I appreciate, and I think this has been one of the challenges in the social sector because the projects are so multifaceted, it's very difficult to standardize them. But I think to commoditize anything and to really scale it up, you do need a certain degree of standardization. So I would think one of the big agendas is pushing the rigor on impact measurement, getting towards a certain degree of standardization with its own individual nuances. And I think the third thing will be around creating capacity in social enterprises to be able to reach this degree of rigor. Because please understand, to be able to get that degree of rigor, there's a cost involved. If you are educating 1 million students in the country, there is a cost of getting that data into one place, and someone has to pay that cost and someone has to pay that price. And I think that is something which becomes important. So I think the government has also thought of a fund which will support these social enterprises as they move on this journey. So that's a quick answer, Tristan, or I've tried to keep it as short as I can. That's the 3 answers that someone asked me.
Fantastic, thank you. Thank you very much indeed. So I welcome your final question around how we can support social or impact enterprises to better capture the impact that they're having as well. So what I would suggest now, I'm going to go for a whistle-stop tour. We've now got about 11 minutes left, so we're really going to keep it quite quick on some of the reflections that you've had from what you've heard, and also maybe reflections on the 2 questions I posed earlier. So I'm going to start with South Korea, and I'm going to invite Doug back to take the floor.
Hi, Tristan. So I just missed what you're saying. So can you say it again?
My question was really how you engage governments in South Korea in your efforts to build the NAB, and also a question on what advice you might have for new NABs that are starting up.
I see. Yeah. Well, the role of the government is important to the ecosystem of the impact investing. Well, to our case, I think that well, I have been the impact investing journey personally, and my company in 10 years. So I would like to emphasize that we private sector actually started up, we took the initiatives, right? So, and there was and the growth of social ventures on entrepreneur side, and also angel investors at that time like us. So I would mention first things that the private sector initiative is very important. And, but governments comes to scale it up, and also to reduce any regulatory the risk for impact investors. So that I think I think the financial sector or the government, I mean the financial authorities has their own framework, their own I think very sometimes quite rigid, and they have a financial well, discipline there, right? But so sometimes it's very hard to convince what's the impact investing. Is this really philanthropy or the financials? It's I mean as you know, I mean, most of people, including the government, has a very thinking process dichotomy, right? So I think it's very important to engage. I mean, I think a very good higher level government officials to understand the impact investing. I mean, they know the conventional investing finance and also, I mean, the impact. So we need, some very high level, to understand, I think what really the impact investing means, and very carefully to engage, how they institutionalize the intermediaries, which is different from conventional financial, the intermediaries, right? But so for us, for example, now we have in Korea, so we are venture capital. When the venture capital in Korea is a license, so we need to get qualified or licensed. And we have another asset management company, they doing the impact investing. So we see all different type of the institutions now. And so, so we are well, in the we are in the close of the venture capital, but we are navigating our impact investing the play. So it's quite hard. I think how do you navigate? I think it's.
I'm gonna just ask you to perhaps just wrap up in the next 10 seconds or so. Just a final reflection.
Yeah, I think that's all. I think it's it's very, very important. I think to find, engage personally and also institutionally the government officials there.
Thank you. Okay, so I'm very conscious of time now. We've got about 7 minutes, and I want to try to at least get everyone an opportunity just to respond briefly. So I'm going to give each person about 45 seconds for your final reflections, so we have enough time at the end for some thoughts from GSG. So perhaps I can move to the Japanese presenters and your thoughts or reflections on what you've heard so far.
Okay, this is Chunmei speaking. Regarding the Japan NAB, I think it's a really organized organization, and the committee member is from different sectors, including JICA, trading companies, major insurance company, and also the venture investors, and also major banks, also including ourselves, and also different sectors view can be and also show that the case studies and also different view from different sectors. So it's really very organized organization, and also the office is organized by chief, and they are operating. They also issue the annual report to build up this ecosystem. And as a venture capital, also a subsidiary of bank group, our role is to show the case study, because I think it's very important to show the case study. The impact investing also can achieve private equity level return, and also can use the IMM and social impact measurement and measurement process to support a successful IPO. So I think it's what we are doing. And also, as mentioned by Sayaka, we are also has many LP investments from mainstream financial institutions. I think with their join, maybe they will build up their own impact investment fund in future. So it's what the Japan side doing.
Great, thank you. I'm going to move over to Australia for some final reflections. You can choose who will speak.
I'll do that. I'll do that. So very quickly, to answer your questions very quickly, in relation to government, 3 roles of government: market builder, market participant, market regulator. Depending on what role it is possible for the government to play in your market, that's the way you engage with government. In our case, we're looking at market builder, and that's where our engagement is sitting. In relation to building a NAB, I think the key thing is it's about collaboration and multi-stakeholder collaboration. So when we thought about our NAB, we put together people that were investors, people from the NGO sector. We didn't have government, but on reflection, we probably would have at least had government as an observer. But think about it in terms of bringing together multi-stakeholders that can talk to different parts of the market and organise transactions around that. That's probably enough from me.
Great, thank you. And let's just go over to New Zealand for some final reflections. Again, I'll invite you to choose one person to speak at this point.
I'll do it, Tristan. Thank you. I think that our observations would be similar to Sally's, that we have a public sector observer member of our NAB, but we don't have government per se there. We find that government works well in terms of enabling and encouraging the sector, but it doesn't here do much in terms of funding, nor does it have to, unless government becomes involved as a player in the market through purchasing of outcomes and building an outcomes funded system. I think the one other observation that I would make is that it seems from everything I've seen that countries where there is a central government agency dealing with impact investing, such as in the UK through Big Society Capital or in Finland, it tends to work better and develop quicker. In New Zealand, where we have to go and educate 6 or 7 different ministries about what impact investing is and how it works in different situations, it's not as efficient. And we're getting there, but it's slower.
Great, thank you. And thanks for being so concise there, David. So I am just checking, we have about 2 minutes left. So I might just go to Arastoo for a 40-second intervention, and then I hope that you can stay over just by a few minutes at the end. Hope we'll aim to finish by 5 past the hour, wherever that hour is, or half hour, I think, if you're in Bangladesh. So Arastoo, over to you, and then I'm going to hand over to Cliff for some help.
I tend to agree that government has a major role to play, and particularly on the issue of scalability in the context why we think that government is important. We would like to see the government become as a player into the market. There are a lot of projects that are being financed by the government could possibly get some kind of a financing from the impact investing, or again the procurement policy of we have a procurement guideline that should accommodate the investment or accommodate investment coming from the impact investors. So actually we are of the opinion that the government does have a role to play, and even like if we think of developing some social investment bond or developing investment bond, if we can actually impress the government that you as an outcome payer, then perhaps that is going to be more useful, because government doesn't have the government refrains from taking the risk of making bad investment, rather having to have the fruit of the investment gotten, and they only pay after the targets are met. So I think we have to try to bring in government, and that is perhaps possible in this country, which is why we think we should work on government. Thank you.
Okay, thank you, Arastoo there, for those final thoughts. So over to Cliff Pryor now. Cliff, perhaps I can ask you to talk a little bit about some of the efforts that you have planned for the GSG in the APAC region in the coming year.
Sure, that was an absolutely overwhelming amount of energy, action, development, initiatives. Really, really fantastic to hear. I'm going to focus on one of the really big questions about what about the other countries that aren't here yet from Asia Pacific, because I think that's a really important area. And obviously, the way in which the GSG movement, the NABs develop, which is initially self-generated and voluntary, it's much more likely to be able, for a country to be able to develop a national advisory board if they have an investment industry, if they have investors and enterprise personnel who can put the time in initially. And that's going to be more difficult for emerging countries and for smaller countries. So what are the solutions to this? Just starting to build your impact economy. Sally puts a number of ideas up: incubators, accelerators, early venture capital, entrepreneurs. Countries like Vietnam, for example, have very strong social entrepreneur networks of support. Universities, Brazil has nearly 100 professors, over 50 academic institutions to help train the sector, and sources of initial capital, which of course will be very different and very in each country. Mentoring is incredibly valuable. You've heard about Japan and Bangladesh. I noted in the chat channel, Australia and New Zealand with Pacific countries, UK working with Sub-Saharan Africa. Grouping is another way, particularly for smaller countries. So for example, a number of countries have clubbed together to form a Central Americas National Advisory Board. Argentina and Uruguay work together. And that kind of grouping, I think, could well work, for example, in Southeast Asia for some of the smaller countries. We are developing a knowledge management setup. It's new, it's still developing. Francesca, who I think is on this session, is leading this. And at the moment, that's focused on existing NABs and near future NABs. So countries like Nigeria and Kenya, which are already in the system for development. Other countries which are stepping up really quite fast, like Malaysia as well. But we will take a look at, can we develop a knowledge management approach which gets countries right from base to the first step, and we'll have a look at that. Rafaela is also on this call, and NAB support is very valuable. I see Joe Sloman is also on this call, doing sterling work on the knowledge management. Where we are specifically funded, we can make more of a support effort in individual countries. And so, for example, we have some funds from the UK's development, International Development Agency, on that, and that includes a limited amount in Southeast Asia. So those are some of the solutions. Buddying, clubbing up, this is a network which shares, and almost everything that you've heard here, somebody else is writing it down furiously in order to see, does it work in their country too. That sharing is the absolute bedrock of the global steering group. Can I just add one other thing? In India, Ramraj was talking about a common standard for impact, almost a common currency for impact. And you will have heard about the Impact Weighted Accounts Initiative at Harvard, which we're very close to. They are looking for more corporates and more investors to trial in the coming months. So if you want to be absolute center of this system and know how it works, nothing would be better than getting some of your friendly corporates and investors to join those trials. In return, of course, you'll see how this system is going to work and how it can work for you in the future. I'm conscious that that's my time, so I'll stop there. Thank you.
Great, thank you very much indeed, Cliff. That's great. I've got one bit of housekeeping from Rafaela, who wants to say something about the toolkit that you've been working on with GSG and UNESCO. So perhaps I can hand over to Rafaela before I conclude the session today.
Thanks, Tristan. This is going to be very fast. Just wanted to tell you that with the GSG and with all these NABs, British Council, the OECD, UNSCAP, our partner in this project, we have developed this very interesting toolkit. Is a policymaker toolkit, so it actually showcases some tools, instruments that governments can adopt to create a strong impact investing market. It will be available after the summit. We will probably launch it at the end of September, and we'll keep you all posted. Thanks.
Great. And on the work of the UN, I would just, I'm not sure if everyone's aware, but about two or three weeks ago at the annual Asia Pacific Science and Technology Committee meeting, all of the Asia Pacific governments actually signed up to a commitment to the role that social enterprise and impact investment can play in achieving the SDGs. So your governments have all made that commitment, and so I would encourage you to remind of it as well. So thank you very much indeed to everybody, to our panelists for a wonderful session. Thank you for keeping to time. And thank you to well over 100 people who joined us this afternoon in Hong Kong, but I think many of you were from other parts of the world. Look forward to following the efforts of the various NABs across the Asia Pacific region in the coming year, and hopefully this time next year we'll have many more NABs that will be telling us what they've been doing. So this session will have to be double the amount of time to enable us to include them. Thanks again, and enjoy the rest of the
Thank you.
Thank you, Tristan.